Hello, welcome back to Mining Network. We're joined with Alex Ball, the Head of Corporate Development and Investor Relations over at AYA Gold and Silver Corp. Alex, good to see you.
Nice to meet you. Thanks for the time.
That's okay. Really good couple of days. You've had two exciting news releases. First of all, let's just run through those just so people are aware.
Sure. Yeah, no, we've been working very hard through the summer. We didn't take a day off, and obviously today we announced additional drill results at Zgounder, some infill, some step outs. The asset continues to grow beyond our wildest dreams. So that was today, and then on Monday we reported a transfer of ownership from the government to us. We bought the remaining 15% for about $6.5 million US. We also added in some permits, so we're consolidating our real estate. And in that press release, you can see very clearly that we're working closely with the government to create more value for everyone. So Zgounder's our flagship. It's a beautiful mine. We announced 100 million ounces over a year ago this time, and we've been drilling throughout. And it's exploding from there. So we believe that we have a whole region within Zgounder called Zgounder Regional. We're going to find satellite deposits, and it's going to continue to grow. So obviously we announced a base case feasibility at $22 silver, and that's just the base case. That's the springboard for everything else. And then quietly last week we announced an important press release for Boumadine, which is on the corridor alongside Zgounder, and we announced 32 meters of 1 kilo. They're not discovery holes. This mine was in production for 40 years, but we have identified 2.7 kilometers of strike, which is astonishing. So that's going to be another leg of growth beyond Zgounder Regional, now Boumadine. It's unheard of to have a polymetallic. It's very unusual to hit at such a high silver equivalent basis, 1 kilo over 32 meters. And there's a bunch of other results over the 2.7 kilometer continuous strike.
And just before we go into all the details, just give us a bit of background on AYA Gold and Silver in terms of obviously where you are, where you're located. Your main asset, Zgounder, is a pure silver play, right? But you've obviously got loads of other assets that you're looking to explore and build up. Just run us through the actual company profile.
So we're very, very unique. We're the only pure play silver publicly traded company on the planet. It's native silver. We're producing already with a small mine about 1.8 million ounces per year. That's roughly 15 to 20 million of operating cash flow per year. We took over the company 2 years ago. It was in complete disarray, and we started drilling, and we grew the resource from 10 million ounces to 100 million ounces over a period of 12 months. It's obviously based in Morocco. We are the only publicly traded player of significance in the area. So we're the poster child, and we're there opening it up for everybody, and it's exciting. So I think we turned the company around when that was, like I said, in complete disarray, delivered on all our milestones, and have the governance now in place and everything to really take this to $1, $2, $3 billion with value as we sort of complete all our work on Zgounder Regional, but also now Boumadine, which is going to be a huge area of growth and focus for us.
Okay. Let's go into the assets just quickly. Obviously, Zgounder's your sort of flagship in production already.
Yeah.
Around 1.7 million ounces at
Correct. We're we're guiding very conservatively to $12 an ounce cash costs, and which is again the base case. We're very conservative with how we present to the market. In our feasibility, we're down to $9.58 of all-in cash costs, and we'll be hitting our mark at 8 million ounces per year over 11-year mine life. So it's amazing to be in this position where you have a base case producing asset, and you have 100 million shares outstanding, and you're in a position to really deliver value and not dilute everybody. So it's been a great experience.
You're obviously, so you're 1.7 at the moment. I think you were looking to ramp up to about 7.8 million ounces by 2024.
Yeah.
How's that going in terms of the ramp up? And I guess what do the economics look like now compared to what they might look like, say in 2024 when this is in full scale production?
Sure. So it's the good news. It's actually not a large build out. It's only 140 million of capex. Yeah. We have about 70 million of cash on our balance sheet right now, and
is the rest debt?
We will be adding debt very shortly. We put out an RFP. we had about over a dozen players come into us. I think the market will be extremely surprised when they see the cost of capital that comes out on the other side. It will be ESG-linked debt, so the cost of capital will be incredibly competitive. So we'll have about 170 million, give or take, plus our operating cash flow per year, which is well within our comfort level to deliver on 140 million of capex. The obvious question everybody asks is, what about inflation? Well, we've seen no inflation on our end at all. In fact, when we priced everything up and we're going, we've delivered on everything we said we'd deliver on. It was, it was very recent, very current. In fact, I would say that we're within budget on time. In fact, we're seeing savings already, and the pricing is actually going the other direction. So it's a big project in the context of Morocco, but it's not a huge. There's a lot of infrastructure already existing, so it was very easy for us to sort of bootstrap the additional stuff that we're moving into. So,
sorry, and I interrupt you halfway through there. Sorry about that. But in terms of how the economics might look and how they might differ between what's your current revenue at the moment, and how might that change, say, when you are in full-scale production?
So the math is quite easy. When you think about our feasibility, right now we're producing 1.7 million ounces. For round numbers, let's talk about 8 million ounces. Let's assume $10 cash costs. That's our margin. So we will be printing 100 million of EBITDA per year.
Nice.
And that's significant with a market cap of 700 million any given day, with all the growth around it for free. So Zgounder Regional, Zgounder, as we sort of find extensions along strike and down dip, but also Boumadine, which is going to be massive. So,
and with the latest step-out drilling that you've just released, I think was that today that you've released the step-out drilling?
Correct.
In terms of the mine life of this thing, what's the current mine life as it is in the in regulatory terms that you've produced? Mm-hmm. And how do you think that might change? I assume they should increase given the step-out drilling, but what's the life of mine at the moment? And I guess what could this look like, this mine?
Listen, it's the sky's the limit on what we're talking about. Our feasibility pushed a 11-year mine life. At peak, we're almost 9 million ounces. Call it on average 8 million ounces per year. Average cash costs, all-in cash costs of $958. We're going to have hard cash costs of mid-sevens, which is one of the lowest cost producing mines on the planet. Again, pure silver, no byproduct carry, and the numbers will grow from there. So again, that feasibility was captured in time based on a drilling result or resource of this time last year. We've been drilling for a year already, and so we're going to add 30 to 50% additional ounces just on the current ore body. We control the entire region, which is, we're assembling permits as we speak. So the vision is 2,700 tons per day. That's built to 3,000 tons, which is almost 11 million, 12 million ounces per year, plus all the regional stuff we're going to find around it. So, I don't want to look too far ahead, but 3,000 tons per day is definitely realistic and might be conservative in terms of where we can go. Again, when you think about pure silver players on the planet producing 12 million ounces per year, it doesn't exist.
Let's just, if you don't mind, let's go into the geology of the deposit just a little bit. What are we looking like in terms of what type of system is this? What's the grade like? What's the processing techniques that you're using?
It's like nothing we've ever seen before, because it's a larger part of a larger VMS system. But when you see pure silver, it doesn't exist anywhere else. There's a sister company down the belt, owned by Managem. They had over 400 million ounces of silver over its history. I don't know where it stands right now, but they produced on average 5 to 6 million ounces per year over 50 years. So again, they keep finding satellites everywhere, and so the longevity to this is significant, and it's just the cornerstone asset for the rest of the company. So I forget what you were exactly asking me, but the way to look at it is the mine life is going to be extended well beyond the 11 years, and it's going to be significant.
Yeah. Okay. Now the other part was just sort of an idea around the grade.
Oh, the grade. So yeah, apologies for that. So the average grade is call it 300 grams.
Yep.
The way it looks and smells is it's vertically integrated from the granite contact, and we've identified over a kilometer strike, and it continues to grow, and 900 meters deep. A system, a sponge. It's a sponge, unlike anything else. So, unlike other silver deposits that are veiny, this is just a big sponge of high-grade silver. So we're getting like, I don't know, 10 kilos over 5 meters. And in fact, what's really interesting is that our feasibility is very conservative, and some of the grades that we're mining are actually 25 to 30% higher than the feasibility. So we're very conservative in what we're doing. There's nothing that quite like it anywhere else, but it is very predictable.
And in terms of metallurgy and recovery rates and the processing, is it all fairly straightforward?
Yeah, 90% recoveries plus. They're very easy to mine. It's overbuilt, so we're gonna be doing ingots. And we deliver it down to. We have lots of demand for it. We go down to the coast to Agadir, which is 300 kilometers away, to the port, and we ship it off.
I'm just trying to get an idea of what this deposit. So, what's the depth and what's the width of this?
900 meters deep, kilometer long.
Okay. And when does mineralization start?
Surface,
At the surface,
right
all
to
the way down to 900
granite
meters.
contact.
Wow.
So right now we're doing definition drilling infill. We're figuring out exactly where everything is. Some step outs because people want us to add ounces on top of it, and we will. So when you look at the deposit, the cartoon that you see in the presentation, you have a fault to the west where it's been dislodged. We don't know where it goes, but we think we've identified it. We've actually added the permits to go there this week, and to the east it just keeps extending along to the east. So we're going to have an open pit part, and we're going to have an underground version as well.
You were talking about this. Obviously, it sounds like a ideal deposit. It's absolutely massive and high grade and sort of open in different areas. How much money are you going to be allocating to exploration? And you were talking about a regional play here as well. I mean, how big are we talking in terms of outside of the current area that you've already identified? I
don't know the exact kilometer, the strike, but it's massive. I mean, and when you look at the cartoons and the maps, it's like controlling the Carlin Trent. It's like a trend. It's like a whole trend. And so there is a scenario where you find another Zgounder, another 150 million ounces, another 150 million ounces. We're also seeing grades of copper up to 20%. Oh. So there's a ton of stuff to look at. Every stone we turn is brand new. It's never been turned before. The ground's never been walked. And right now, I mean, I think when you think about sort of challenges in front of us, we only worry about the commodity price. It's out of our control. Obviously, the build-out's on time and on schedule. The beautiful thing about operating in Morocco is there's a ton of talent there, and I get 1,000 resumes a day. And honestly, I kid you not. So we have a lot of expats there as well, running the ship. But at the same time, we're just plowing forward, and you think about risks. I mean, the challenge is we have a very small mining footprint to start with. It's only like it's within a very confined area, so there's a lot of trucks that will be going around. So that's why we're only doing 2,000 to 3,000 tons. There is a scenario it's much bigger, but because it's literally a mountain of silver. It's very unique. So we have to be, there's going to be the trucks running all the while. The other thing I haven't touched upon is the ESG push, because it's very important. It's part of our fabric. We're going to be 100% renewable.
Really? What's the breakdown of renewable? Is there hydropower in the area, or is it many solar?
Morocco has been well ahead of the curve in terms of the renewable push, and so 35 or 40% of their load is renewable. Okay. And so we've allocated 100% of our energy to renewable. Our fleet will be 100% renewable. We have water mitigation systems in place to really lower our consumption of water. We are doing all kinds of social programs domestically. So again, we are part of the fabric. In that last press release where you saw us increase our ownership, the government wants to work with us because we are Moroccan. Yes, we're a Canadian company, but we're Moroccan, and we're opening it up for everybody.
Well, I think you've just established that yesterday with the press release. Obviously, the government are happy to work with you, and they're supportive of what you're doing. I think obviously just touching on Morocco, because we have discussed it a bit, I think it does frequently rank, if not the best, one of the best African jurisdictions for mining. Mm-hmm. Are there any risks in Morocco in terms that you can foresee? I mean, is there what's the dynamic at the moment? And obviously, I know that it's a very pro mining code, so that's always working in your favor. But what's your experience working in the area?
Listen, we used to spend 30 minutes of our time in every conversation talking about Morocco. Now it's like, don't want to hear about Morocco.
Yeah.
We want to hear about the asset and the growth. And a lot of our meetings at Beaver Creek are with larger companies out that, frankly, are seeing our press releases. All are very interested in Morocco. It's a very great place to operate in. We do have the benefit of having a team in place over there that, you know, one guy was involved with OCP on a very senior level. We cut deals that are fast. First of all, they're fast and they're very economical for our shareholders because of the people in place. So we're in constant dialogue with the government. You know, they want to vend in other assets as we speak. We're just constrained by, we are a silver company, so we got to be creative at how we look at stuff. You know, there's other commodities. They mine cobalt, they mine copper, nickel. It's all there. Like, that's the thing that the world's waking up to. It's all there. In terms of operating on it's 20% tax, 3% royalty, very, very commercial. They actually are giving us permits and saying, listen, we want to forget about converting or extending into exploration permits. We want you to mine it. When you guys are comfortable, here's your mining license. So it's very easy. I would say it's easier than operating in North America.
It's good. No, I've heard the same, and it's good that, especially somewhere like here in North America, people are already starting to understand that Morocco, obviously they're not usually African focused. It's good to hear that they're starting to hear that. Let's look a little bit more forward, just to close this off. I mean, how does the company look like in 5 years' time? Because you've obviously, you're ramping up to full scale production. You're going to be turning over a lot of revenue. How much are you allocating to expansion in the region and really growing this into a multi-asset company? Yeah,
sorry, and I think you asked it before in a different way, because you asked about our program, our funding for exploration. It's a huge focus. Listen, we look at everything on the planet because we have an obligation to get the biggest return for our stakeholders. Nothing stacks up in terms of a return for what we see. So, you know, for 8 million, so talk about, you know, we're allocating anywhere between 10 and 20 million on average on an annual average to exploration.
Good.
We have the cheapest drilling around. We're not seeing inflationary pressures on that basis. Like I said, there's opportunities to consolidate elsewhere. We're not doing that. Why? Because it's just the return is so much more. It's so much better in Morocco. I mean, look, we just turned out these results. 2.7 kilometer strike at Boumadine. It cost us, you know, like a $5 million budget allocated to it this year, and we can put out a resource in the next 12 months of anywhere between, you know, 3 million ounces of equivalent gold there. That's unheard of. Yeah. You know, what are you buying $3 million of equivalent gold elsewhere? 50, 100, 200 million market cap. We're not doing that.
No, I'm always a believer in value through the drill bit.
Absolutely.
Just final one, I guess. Obviously, might be a bit unfair because you've just released 2 press releases in the last 2 days. But what else have we got to look forward to? What's up your sleeve for the next couple of months or even the next year?
Drill. We're going to continue to hammer the market with drilling results at Boumadine, Zgounder Regional. Zgounder Regional is going to be a huge focus for us too, because it's going to show the satellite deposit potential. We're going to announce a funding a PR for our for Zgounder, $100 million US capex, for $140 million capex, but $100 million to go towards it. It's going to be, again, low single digit cost of capital, so that's meaningful. Again, that's de-risking the assets further. But again, it's all about adding resources. We'll be doing a sustainability report, which is important. But again, I think the market wants to see ounces added quickly, and we're going to do that, 100%.
Awesome. All right, well, I'll follow it. Alex, good to see you.
Thank you. Hopefully next time we see you, it's a $30 stock.
Yeah. No, I hope it is too.
Thank you.
Awesome.